Hey everyone, welcome back to Corporate Decoded, the place where we try to find the hidden treasure, or sometimes just the hidden red flags in those massive corporate filings. Today we're digging into PSQ Holdings Incorporated latest report, and let's just say they are doing some interesting things with their stock and warrants. Before we dive in, if you love getting these complex financial documents broken down into plain English, make sure you subscribe right now. And hey, we have a fantastic community over on Discord, all linked in the description below. Come join the conversation and level up your investing knowledge. Alright, let's get right into what is happening with PSQ Holdings Incorporated. They've just announced a new deal, a securities purchase agreement, folks, which is a fancy way of saying they're selling more of their company's stock and some other options to buy stock. This is happening through a registered direct offering, so it is a way for them to raise money fairly quickly by selling new shares. The big news here is that on the 18th of December 2025, PSQ Holdings Incorporated, sometimes I'll just call them PSQ for short, was involved in a deal where they agreed to sell a lot of stock and warrants. Think of warrants as options to buy stock later at a set price. This offering included shares of their class of common stock, and something called pre-funded warrants, and also common warrants. The price for all of this combined was $1.10 per S-hair. Now the pre-funded warrants had a very small exercise price of just 0.001 per S-hair. That basically means they are almost as good as having the actual stock right away, but they are structured as a warrant. Let's talk about these common warrants for a bit. These have an exercise price more like a typical warrant at $1.18 per S-hair. They can't be used right away though. You have to wait 6 months after they're issued, and then you have a good chunk of time to use them because they expire 6 years after they were issued. So these are definitely longer term plays. Now the pre-funded warrants, as I mentioned, have that super low exercise price of $0.0001. They are ready to go immediately, meaning investors can use them right away. This structure is often used to allow investors to get ownership without the immediate tax implications of actually buying the stock outright. It is a bit of a financial sleight of hand for tax purposes. The company is selling these shares and warrants under a prospectus supplement. This is part of a larger shelf registration statement. What that basically means is they had this ability to sell shares registered with the CSE for a while, and now they are taking advantage of it. It helps them raise funds more efficiently when needed. To get this deal done, they hired Roth Capital Partners LLC as their placement agent. These are the folks who help companies sell their securities to investors. PSQ agreed to pay them a fee of 6.0% of the money raised from this offering. So if they raise $7.5 million, the placement agent gets a good chunk of that. So the big picture here is PSQ raised about $7.5 million before fees and expenses. They plan to use this money for working capital and general corporate purposes. This is a pretty standard statement, but it tells us they need cash for day-to-day operations and other company needs. The actual closing of this deal happened on the 19th of December 2025, which is just 1 day after the announcement. That is pretty fast. The purchase agreement itself has all the usual clauses you'd expect. It covers what PSQ promises to do and not do. For example, they've agreed not to issue any more stock or similar securities for 90 days after the deal closes. This is called a lock-up period for the company. It prevents them from flooding the market with more shares right away, which could depress the stock price. They also agreed not to enter into any agreements that involve what they call a variable rate transaction for the same 90-day period. This is a bit more technical, but generally it means they are avoiding certain types of financing that could be disadvantageous if market conditions change. And on the flip side, the company's own leaders like directors and top executives have also agreed to a lockup. They can't sell their own shares for 30 days after the deal closes. This is a common practice to assure investors that the insiders are aligned with the company's long-term success and aren't just planning to dump their shares right after a new offering. Now, they also put out a press release on the 18th of December 2025 announcing this offering. This is part of what is called Regulation FD disclosure, which basically means they have to share important information with everyone at the same time. That press release is attached to this filing as an exhibit. This is important because it means the public got the same news as any major investors. Like most companies, PSQ included a section on forward-looking statements. This is a standard legal disclaimer. They're basically saying that any statements about the future hopes, plans, or expectations are just predictions and could be wrong. They use phrases like anticipate, believe, or expect. They are telling us these are not guarantees. Things like market conditions or unexpected events could mean the actual results are very different from what they're predicting. They also state they have no obligation to update these statements unless required by law. It is a way for them to protect themselves from future lawsuits if things don't pan out. Finally, for the exhibits, we see things like a legal opinion from Faegre Drinker Biddle and Reth LOP, and the actual agreements such as the placement agency agreement and the securities purchase agreement. These are the detailed documents that back up all the information presented here. So what does all this mean for PSQ Holdings Incorporated? This offering is a clear sign that the company needs capital. Raising money through stock and warrant sales dilutes ownership for existing shareholders, but it provides much needed cash for operations. The fact that they are doing a registered direct offering suggests they likely need the funds relatively quickly. The lockup periods for both the company and its insiders are a positive sign showing a commitment to stability in the short term. However, the underlying business health and how they will actually use these funds for growth, or just to stay afloat, will be the real story. They are essentially betting that they can make enough money from their operations to justify this dilution and grow the company in the long run. We'll have to keep a close eye on their future reports to see if this infusion of cash translates into tangible business success or just keeps them treading water. Alright, that is our breakdown of PSQ Holdings Incorporated latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.